And oil is certainly helping the sectors out, but it's really the only one. Not a lot of energy elsewhere, and healthcare is still basically lagging here. Just take a look there. Nice to see oil move to the upside. Put up the sectors that we got here. Energy, materials, tech's lagging a little bit as well. Healthcare is oversold, as you can see. Industrials a bit on the weak side. Boeing's been a little bit weak. In terms of earnings, going to be a lot of stories this week. 30% of the S&P 500 are reporting. And once again, the company's reporting today, a small number, but beating by significant amounts. Kimberly-Clark's a new high for Kimberly-Clark. They beat by almost 8%. This is how much they're beating by. Halliburton beat by 5%. Grainger, which does maintenance services, smaller beat. And take a look, they're all trading to the upside except Grainger. Grainger, some of these companies are reporting a little bit disappointing revenue numbers. So when you get that happening, if you put up this next full screen, you'll see their Grainger's trading a little bit to the downside because of weaker revenue numbers that are being reported. Halliburton beat by a small amount, but with these oil prices going up, the analysts are going to be wrong on these numbers. So remember what happened last year. Everyone thought there was going to be a massive global economic slowdown. They dramatically cut the earnings estimates for the oil companies. So on January 1st, they had 41 cents for the current quarter, the one we're in right now, not the one they reported. 41. They dropped it all the way down to 29 cents in a few weeks. Those numbers are too low now, and I think you're going to see those numbers start coming up for the whole year if oil stays up around here. And of course, people have been saying, gee, why don't we get better outperformance? And we haven't generally on the year. If you look at the S&P, we're up 16%. The energy sector's up 17%, about in line, but crude's up 40% or better. The closest component that would respond to oil would be the exploration and production stocks. That's only up 20%. And I think Brian hit it on the head earlier today. When you've got oil going from what was in the middle of the year, it was just about $42, and then we went from $75, we had 42, went to 65. It's very hard to plan when you have oils bouncing around that much. Speaking of hard to plan, we have terrible performance in the healthcare sectors. This Medicare for all issue has gotten away from the whole sector right now, and of course concerns about drug pricing. So we have two things here. This is essentially flat for the year, one of the 3 or 4 major sectors in the S&P 500, and of course all of the managed care stuff, the Medicare stuff, the managed care stuff, Molina, if you take a look at Anthem and some of the other big names, United Health, widely held names, they're all trading to the downside, rather notably this month. This started about 2 weeks ago and hasn't really improved at all. That's been a major drag, and why we have not been hitting the historic highs on the S&P 500 we keep anticipating, even though we're only 20 or 25 points away from that. Finally, despite the down day, modest down day today, and Europe is closed, I just want to remind everyone we're in a global market recovery in 2019. With the S&P up 16%, Europe, which is, I use the stock 600, it's sort of the S&P of Europe, up 16%. That's a huge relief. In December, everyone thought Europe was falling apart. It has stabilized and rallied. And China is not only stabilized, China is the world leader right now in terms of major stock markets, up 33%. The fact that you've got these two sectors, Europe and China, stabilizing and in line or outperforming the S&P, that's why we've got the market's holding on right now. Still near the lows for the day, though.